G'day everyone, welcome back to Pete's Investing. It's June 14, 2023. This is the Euro US dollar currency update. We're in a neutral positioning on our weekly and daily, so avoid taking trades on the lower time frames. But we do have a divergence playing out on the hourly, and we'll give you an update there. And there was also a divergence on the daily. First off, on the weekly, the triple moving average of the price chart and the moving averages of the CCI are not aligned properly. So it's giving us this neutral position after it was bullish for a number of weeks there. On the daily likewise, you can see there the CCI is breaking up, and so is the moving average of the price chart, but they are not aligned, so it's giving us this neutral positioning. Now if I zoom out, there was a divergence that played out, a bearish divergence, longer term here, versus a bullish divergence on the price chart. This is on the daily. And we did draw this channel, and once the price breaks below that channel, then we do a potential entry, and our initial target area would have been the next Fibonacci level below that, which was between the 78 and the 88%. And if I zoom in, you can see that wick of that candle there broke below it, so that was effectively a successful trade. Should have exited on that day there when it broke below that into that little area. Now since then it's actually rebounded to the upside and now resting on this diagonal trend line. So on the hourly, in the closer time frame, if I zoom in, you can see here we've got more recently in the last few hours, we've got a bearish divergence on the CCI versus a bullish divergence on the price chart. And the way to look at this is we draw a channel down to the lowest candle in that divergence range. So if the price breaks below that channel, that's an entry signal, and we draw a Fibonacci down. You can do it even to that point there, or I prefer to do it a bit lower to that point there. Let's draw a Fibonacci from that low to that high. So our initial target area will be at that 38% down to the 50% level initially. You can go a bit more aggressive, but depending on your risk profile. But I like to take safe trades, so as soon as it breaks below that channel, then that'll be your initial target area. Now, there's no guarantee it's going to execute, of course, in terms of success. For this to fail, we need to see the CCI break to the upside, and we need to see the price also move to the upside as well. Whereas if the CCI continues to a downtrend, then theoretically the price will also continue a downtrend until it eventually turns. It doesn't mean it's going to be a long-term trend direction on the Euro US. These are just generally short-term retracements before continuing in the same direction as before. So I'll see how that goes. Also, if I zoom out, you can see there we've got a back test, a long positioning back test and a short positioning back test. So as the price is declining, you would have gone primarily short, and you would have avoided trading this on the long side. And what I mean by that is, if you're new to the channel, we only take the direction of the trades on the lower time frames when the weekly and the daily are aligned. So going back here, as the price is declining back in February 22, so if we go back to February 22, you can see they're primarily short trades on our indicator down there, and February 22, or only short trades on the weekly, no long trades. So you would have avoided taking long entries during that period. And likewise, you would have started taking long trades when the weekly was going long there. In the same period on a daily when they were going long, you would have taken long trades during that period only. So to understand this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.